Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session. So what we're going to do is we are going to get started on our analysis. We're going to start with the euro dollar. And just to answer your question already, I'll tell you, no, I did not get short the euro dollar. And you know, the guys in our chat room yesterday were talking about the relative strength diverging in the euro dollar when we hit new highs in the 60s. And you know, I didn't. I mean, I heard, and uh, it um, uh, you know, I heard what he was saying, or what they were saying, and I didn't take advantage of it. So I have an order actually. It's still out there. I'm going to leave it out there. I have an open order to sell the euro dollar when it gets to 110. So I left that. I'll leave it in because it's a good till cancel order. But anyway, as you know, we have really key resistance coming into play around 110. I tweeted it, or I blogged about it, is what I meant to say. I blogged about it yesterday. I still think it's extremely important resistance right here. I'm more fearful at this point that we are not going to get up there, and I'm more fearful that I'm going to miss this trade. That doesn't mean that it's okay that I just start shorting the euro dollar now, but I'm thinking, man, how about, I'm just thinking to myself, how about if that's it? You know, how about if that was it? But I'm going to try to, you know, it's on a Friday. I don't really want to establish any more positions, especially with the yen being as volatile as it is. So what I'm going to do is I'm going to, you know, patiently try to wait for the, you know, 109.80 or 110 level. I think those are all really key resistance levels. I want to put in resistance at 1.0980 today. You know, obviously anywhere up here is really key. We are still in a range environment. Support, you know, we got to figure out where support is for the euro, because right now trendline support, which we talked about yesterday, looks like it's still holding, and it is. Okay, there's a trend line support holding. Yesterday, I think we wrote down, you know, we might have wrote down 108.50 or 108.70. I can't remember, but as you can see, trend line support's pretty important here. So this morning it comes in. Well, we should just write down those lows, which is 108.82. So 108.80 is really key support today. 1.0880. It's key support for bulls. Now I know it's very close. It's only 25 pips away, but when you're in a range like we are, when you're in this range type of environment, you have to imagine that being in a range environment, you're going to, you know, you're going to have tighter ranges. You're not going to be too far from them. You know, you go to like the dollar Canadian or the dollar yen right now. You know, those currencies are whipping up, you know, 15, 20 pip moves. Or excuse me, 20 pip moves, you know, within just a few minutes, where, you know, the euro dollar is kind of a grind up and down. You know, it's much different price action that we're seeing in the euro. And you know what, the euro will be just as active as the yen, and just as active as the Canadian at some point. But right now it is not. Right now it's confined to a very tight range, and you know, the price action is reflecting that as well. All right, let's go over to the cable. So the pound, I just noticed that the pound just gave up some gains from this morning. The pound's been really, I mean, this is, you know, talk about choppy. I mean, look at this thing. If you guys want to get long the cable, right now it's probably not a bad time. Actually, I might get long some cable. I mean, really, even if it's just for intraday, I mean, your risk is, I haven't yet, thinking about it. But there's that big inverted head and shoulder pattern. You know, I guess my hesitation is that we did have a false breakout. You know what I mean? I mean, look at it. False breakout not only once, twice. You know, and the pound's gone right back down. So you know, maybe it isn't the smartest decision getting along the cable today. And like I said, it's Friday. I don't, you know, staying away from it is probably the smarter thing to do. So, but let's check something. I don't need to. I don't need to. I don't need to throw and destroy another laptop right now, do I? Okay, so from the lows, we're at a 38% retracement. The 50% retracement comes in right here. We have support right through here as well. What is this? Oh, that's what that red line is. That red line goes. It's right there. It's that support. Let me remove that for a moment. Uh, okay. You know, as far as the cable goes, as far as the cable goes, let's just make the assumption we break through this trend line, and if we do, you have to think about where your downside is from here. Your downside's probably at 142 because your support. Because imagine this happening, and like I said, I'm not going to get long the cable. There's no reason. Not on a Friday. There's nothing enticing me to do this. Let's say we break through, which it looks like we might. So we break through, we clear support here, and then, just as we clear support, boom, we just bounce right back. So I think this 142 level is going to offer support. Okay. Resistance is obvious at 144. Any move up to 144 is going to be sold at now. So it's pretty volatile. I mean, if you guys want to get long the cable, 142 looks 142.05 because 06 is the 618, but actually I'll just write 142. And if you want to play the extreme ranges of the cable, I think that's the way to do it right now. Is just, if it gets down here, maybe get on the long side, and if it gets back up towards 144, maybe get on the short side. Like I said, there doesn't seem it doesn't seem like there's any reason right at this moment in time to be with playing the cable, because it's chopping all over the place. All right, let's go over to the dollar. The Swissy. So here's the Swissy. We are obviously at key resistance. So following the BOJ, the dollar Swiss rallied, sold off. This all happened during the BOJ. That's a real wick, by the way. Rally, sold off. It's crazy, isn't it? Rally, sold off, and then we've just been rallying back. And we have moved up to the 786 retracements, which is the 102.10. Have we written down? I mean, think about this on the Swissy. Have we written down 102.10 for how many days in a row? I think 102.10 has been our resistance almost every day this week. If I don't keep the bias charts, I know you guys, some of you guys do. Haven't we written down the 102.10 like every day this week, pretty much, as resistance? Rejection. We're here. I mean, rejection. It's like crazy. Anyway, but looks like we can still scale a little higher. To me, where can we go? Where can we go? Well, let's go to a 4-hour chart. I'm going to look at that spot right there. Right. I took some prescription allergy medication, so if I get tired and drowsy, just kidding. I think it's going to clear me up though. The 88% retracement comes in at 102.60, so 102.65. There's a lot of support right there. There's previous resistance. You see the rejection right there. Big deal, right? Sold off, came back, hit it, stopped on a dime, reversed hard. So that 102.60 probably is going to be an attractive level for the Swissy now. obviously support is down here, and it's key at 101.20. Oh, I didn't want to do that. Hold on. I can actually breathe out of my nose. This is nice. I haven't been able to breathe out of my nose all morning, out of my nostrils. Okay. So 102. $102.60. Well, I'm just going to write down 102.60 as being resistance now. 1.0260. And the support is going to be at 102.20 or 101.20, like it's been, and that's key support, and nothing's changed there. All right, let's go to the yen. All right, so here is the yen. All right, so like I said, last night I was very fortunate, just happened to be in front of my computer at the time. Usually during the BOJ announcement, I'm either asleep or I'm usually asleep, actually. Again, I was doing homework with my kids because my wife's out of town, so I had them wrangled in the office at the time, and I was helping them when this activity started. So I obviously had to sit down, and I shorted the hell out of all the yen pairs when we were here. I covered them all when we were in the teens, and it took me until we were in the 30s. So when we got in the teens, I started covering, and then once we were in the 30s, I covered everything. Shorted every yen pair that I could find, and I shorted them pretty aggressively. So I did really well. I do have a dollar yen position, short position established right now. My short position is at 120.40, just letting you guys know. It is a relatively small position. To me, it's more of a marker, but it's as you guys know, I've been looking to sell these levels since 2 weeks ago. So now that we're here, I'm already starting to nibble my way in. However, I'm not looking to add to them today. I really think that I think Paul Franco's assessment that why short them right now, it's probably the attitude that most of the market has at the moment. We might get an opportunity to short them up at 122 earlier or later into the week. I still think that this is a big head and shoulder pattern. Okay, so we may make it up to 122. If you look at the previous highs here, and you guys know I've been thinking this is a big head and shoulder pattern for a while. The previous highs up here are 122. You see the high right here back in early 2015, late 2014. We got relatively close to 122. We're just the BOJ's actions putting the deposits on negative interest rate, and with negative interest rates or applying that now is basically a deterrent. It's a deterrent from institutions to parking their money, and it was a warning to the markets that we can do more. So do not put your money here. Put your money somewhere else in a different currency, and so that probably will weigh in through the market over the course of the next couple of days. So if you are looking to short the dollar yen, I think a better price is going to be up towards 122. I don't mind staying in position right now. I've made really good money over the last couple of weeks. I have the ability to take on a little risk, and these are pretty small positions, so I don't mind adding to them at all. I won't even blink. All right, so here we are. This is our old zone that we were looking to sell, and the really key today is going to be, and from what I understand, there's some options that are rolling off today in yen, so we might still get a lot of volatility. It's Friday. It's end of the month. Position squaring. We might see some volatility here. If we close below the 618 retracement, that's going to make me feel a little bit better about that we're making a turn, but I really truly believe that we're probably going to head up towards 122. Me personally, I think that that's probably a good target for us in the near term, would be somewhere up here, okay, in the next day or two. When I say day or two, I'm talking the next couple of trading days. For today, our resistance is going to be, the overnight highs. And there's a good chance what we could do is we can clip new overnight highs and have, divergent relative strength. But I would say that the 121, I'm just going to write down 121.50 is resistance today. 121.50, 122 is resistance, and it's going to be pretty key resistance. Right? The BOJ has put us back into a range. Right? We're still carving out a big head and shoulder pattern. Support in the dollar yen. Let's go intraday. Support with the dollar yen. You can see all these see all these wicks down here at 120.50, and notice how we can't break below those. Intraday, that's good support, because if we break through 120.50, what that's going to do is it's going to suggest that we are now making lower highs intraday, or lower lows intraday. And so if we break through 120.50, that probably puts the downside back into play. So I think this should, and I think that 120.50 should hold today. I really do. All right, when I come back, we're going to do the Canadian, because we have Canadian GDP. We obviously have US GDP today too, advanced GDP. We have Canadian GDP. We have Chicago PMI. We have University of Michigan Consumer Sentiment. We've got employment cost index. We got a lot of data coming out, so we still have a lot to do. Canadian, Kiwi, Aussie, dollar index. We're going to look at the peso, look at the Nordic currencies, Swedish krona. We're going to take a look at all the yen pairs. We got so much to do this morning. If you guys are asking questions, I'm not ignoring you on purpose. We just don't have a lot of time. I'll be back in a minute. Don't go anywhere. Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. All right, so we're going to continue on, and I'm going to try to fly through this analysis. Now, as most of you know, I've closed out my dollar yen shorts. I closed them out not too far away from here. It's been a wonderful couple weeks. I hope you all did fabulously well with the Canadian. If you missed my story, I'm not going to rehash my whole story yesterday, but long story short, this wick right here, I was driving my kids to school because my wife was out of town, and I never drive my kids to school. My wife very rarely goes out of town, but she was out of town for business for the weekend, and of course, the only time I have to drive the kids out to school during the busiest time of the year here in North Scottsdale, and it took me forever to get home. I missed this whole thing. So anyway, I got out yesterday, not too far away from where we're at, and I closed all my Canadian pairs. I have no problem establishing them back. Frankly, I want you all to know that I think the dollar Canadian, and I know most of you know this, I think the dollar Canadian is eventually going here, but I think the trend is still higher. So, if we get down to the 137, 136, 135 level, I'm looking for longs again. But I think in the near term, I think we're going down here. But that's really more dependent on crude. I don't think it has a whole lot to do with the Canadian economy, nor anything else but crude oil at this stage. It's really easy to look at. I mean, if crude bounces, the dollar Canadian is going lower. If crude goes down from here, the dollar Canadian is probably going to go higher. I hope, and I'm saying this from a selfish standpoint, no other reason, I hope crude oil dips back below 30, goes back to 29 or so, and the dollar Canadian goes back up towards 143, because I'm going to short the hell out of it if it gets up there. I don't know if that, I think it's a complete coin toss at this point. Hence the reason why I'm not in it. I don't know where it's going to go from here. I'm a little nervous on how crude reacted yesterday. So, okay, so let's hash out the dollar Canadian right now. I'm getting rid of some of these lines just to remove them so I don't have to see them. Okay. If you look at the hourly price action, okay, what we're doing is we are now getting these false, and even overnight, we're getting these false breaks below 40 bucks. Do you see it? But we're not making higher highs. Do you see that? We are not making higher highs. We are actually channeling lower. Okay, yeah, we spiked through down here. Sure, you can argue with me, Blake. Well, we spiked down here. That's, it's actually a higher low. Yes, it is, technically speaking. But look at the bodies versus the wicks. Okay, I think this is what we're doing. Okay, and the reason why this is so important is because if you really if like, let's say you are somebody who says, hell no, Blake, the dollar Canadian's going higher from here. It's going higher. Crude oil is going to dump again. Crude oil, there's nowhere to go. Crude's going to go back to into the 20s. There's just no way. Well, one thing that you have to, I think you have to see, and again, you're coming now. My position is a very unbiased position at this point. I don't have a position in the dollar Canadian. Okay. But what you have to see, in my opinion, is you have to see a break above those highs. If you do not get a break above 141.15, it's channeling lower, and we're probably going to revisit this level again. All right. So this support that we saw yesterday on that spike low below 139.50 is very much in play at this moment. And how about if the Canadian GDP number comes in stronger than expected? How about if, Canadian, and you'd be like, well, hell no, Canadian data is, it's crap, it's crap. Well, remember, it's backward looking. So, the market's looking for 0.3%. How about if it exceeded expectations, or maybe it just came in line, and the market goes, oh my God, it's not as bad as we thought. Okay, we can still see 139.50. Now, if we break above 141.15, I think we're going back towards the 142.50, 143 range, and I'm going to be happy shorting it up here. I'm just telling you that right now. But we have to break above. We have to break above this. If we start taking out new highs on the day, I think that might even be enough for me to say, all right, we're going back up in this range. I'm not personally going to trade the dollar Canadian today. So I'm letting you know right now. Even if we dip to 139.50, I still don't see that as a value play. If we get down to 137.50, and I might think about buying it, but because that would be completing this flag pattern from way over here. I'm not buying it down here. I'm not even trading it. I won't even trade it today. I mean, we'd have to spike up all the way up here to 143, or all the way down to 127 for me to, or 137 for me to even be remotely interested today. Okay, and that, the chances of that happening are probably less than 2%. So right now, 140. Let's call it 141.20. Actually, it's 141.20 and 139.50. 1.3950 and 141.50. 141. I'm sorry, 141.20. Not 141.50. 141.20. All right, and this is going to be key support down here. This is pretty key because that spike low should hold. And I'm going to put us in a range now. We've been bullish for a long time, the dollar Canadian, but these probes below 140 really suggest that we're probably going to be in a range for a while, okay, before resuming our uptrend. And remember, I think that the dollar Canadian uptrend is very strong. I still think it's very strong. Ultimately, I think we're still going to 155.50 up here, 155, excuse me, yeah, 155 or so. Eventually, not today or anything, sometime this year, we're going to be traveling up there. That's the cup and handle pattern, but there's going to be some consolidation. I believe that we're in that consolidation right now. All right, Aussie, or Kiwi, excuse me. Kiwi, very choppy. we've been writing down 65 cents and 64 cents, right? 64 cents is our support, 65 cents is our resistance. Interesting, the Kiwi, this is due to the BOJ. The BOJ really threw a monkey wrench in a lot of these commodity currencies. Because the BOJ's actions really, I think, um, you know, put a spin on these commodity currencies that, you got a lot of short covering of the Aussie yen, Kiwi yen, last night. So um, it actually, rearranged what we're looking at here. Now, as far as the New Zealand yen goes, 65.50 will be resistance, 64 cents is support. I don't know if there's a lot to do with the Kiwi right now. We are still, you can see how we're still making, lower highs. We have a brief higher high right there, but I don't know if I'll get too excited about it, especially with futures rolling over a little bit here. So 64, I'm going to write down 64, 65, 65, 60, and 64. And I'm just, it's in a range. Okay, everything's in a range. 64. Stocks when everything's in a range. You guys know, I tell you guys this all the time. Things I hate the worst in the market is when you look at my bias chart and it says range everywhere. When it does, that's so it's tough. It's tougher environment to trade. When everything says range. I mean, you have to sell rips, buy dips, and be extra careful not to chase strength. All right, so here's the Aussie dollar. Inverted head and shoulder pattern actually points to way up here. We had the double bottom, extension double bottom hit. We're slowly making our way up, but we stopped at the 618. Let me get rid of this for a second. Okay. You see this down or upsloping trend line? That's going to be tough resistance getting through here. So anywhere from 71.35 to 71.60, I'm just going to write down 71.50 as being resistance. Now we are in an inverted head and shoulder pattern, so as long as equities don't fall apart, so I just gave you the kicker. As long as equities don't fall apart, we should grind back up here. We should. If equities fall apart though at the seams, which let's say the market says, screw you BOJ, your action means nothing to me, and stocks go, excuse my language, stocks go tits up, they fall on their back. If that happens, you're probably going to see these commodity currencies come under immense pressure. All right. Right now, you'll notice that the hourly candles are holding pretty aggressively right through here. Okay, so that means that this low right here is ultimately very important. It comes in at 70.60 in the Aussie. If we break below that, 70.60, if we break below that, that's going to trip some stops, because you've got to imagine there's people that are long that are playing this inverted head and shoulder pattern, and they're like, yeah, man, inverted head and shoulder pattern, bottom of a trend, perfect reversal place. You got a false breakdown, right? Remember, false breakdown, inverted head and shoulder pattern. Dude, this is in the bag, baby, in the bag. I'm getting long, looking for 73 cents, no problem. Well, they are going to have a problem, because if you break through here, there's going to be all sorts of problems. There are going to be all sorts of stops sitting below there, and you're going to get people that go, they're going to be that total, puffy chest to arched shoulder look, the puffy chest. Yeah, man, we're going much higher, and then the arched over shoulder look, going, oh, I can't believe I did that. That was a sure thing, and I got stopped out. That's going to be that attitude. So watch the Aussie. We start breaking down through here, and it's going to catch a lot of people off guard, because this has been, you want to talk about one of the most talked about chart patterns right now? in the FX market is the inverted head and shoulder pattern in the Aussie. That's the most commonly, I would say, one of the most commonly talked about chart patterns right now that I've seen. Oh yeah, inverted head and shoulder pattern. We're going to 73 cents, no doubt about it. It's easy. BOJ just supported the market. Hell yeah, we're going right here, without a doubt. Not even thinking about it until you get stopped out, and then they go, oh, So I think the chances of a potential pattern failure here are high. And you guys know my favorite pattern failure is a head and shoulder pattern because it catches everybody. It's like one of the most commonly seen patterns. People think they get tricky, like, ooh, look at me, I'm a technical analyst. I saw an inverted head and shoulder pattern. I'm good, because it's a complex pattern, but it's really like one of the worst patterns of trade. It's got probably one of the worst completion rates of any pattern out there too, Anyway, just food for thought. I'm not doing anything with the Aussie. I'm just giving you guys some ideas here. All right, let's go over to the dollar index. The ruble. Nice reversal on the ruble still. Here's 60. All right, dollar index. So, did we just get a false breakdown in the dollar index? Looks like we did, didn't we? Now, remember, the dollar index is obviously influenced by the BOJ, or the yen. The yen has a big weighting in the dollar index, larger than everything else but the euros. So, this dollar yen, this reversal here in the dollar index is skewed because of the BOJ. So, just keep that in mind. But we did have, it is a false breakdown. I mean, there's no doubt about that. I think, just looking at it here. I don't know really what to do with the dollar index. I mean, there's no real, to me, there's no real no pressing reason why I should be long the dollar index or short the dollar index. Support is I guess 98.35. Resistance, would be the spike highs up here, which would be 99.25. Okay, so 98.35. I hate this. I hate being in a range everywhere. 99.25. You guys know all the actions in the Canadian and yen pairs, so that's why the dollar is just the dollar is, as you can see here, based on our bias chart, is just held hostage by all the other volatility that's happening. Okay, let's go over to the peso. I did exit my peso yesterday, so I made really good money in the peso. This I was short at 862 or 1862. I was short at 1862 right here where my cursor is at. I closed it yesterday at 1825. We're at 1831 right now. This is another head and shoulder pattern that, maybe is not a head and shoulder pattern. Maybe it's just a flag pattern waiting to break out again. I don't think there's anything to do here. I mean, you guys know as far as the peso goes, I really think shorting it, if we ever get to 19 or 1890, okay, we ever get to 1890, I think being on the short side right there is going to be great. Okay, oops, let's go on. Yeah, so if we ever get to this 1890, being on the short side up here is going to be great. I just don't know if we're going to get up there. Like I said, looking at it right now, like intraday, I don't know what I would want to do with it. I'm glad. Frankly, I'm just glad I'm out of it. I didn't get the best price I could get. I didn't get the worst price I can get. I just got out yesterday around here, and I'm just kind of happy I'm out. And I don't, and even where we're at, I don't see any, where's my edge? Where is my, I can sell it here, keep a real tight risk, or I can buy it here, keep a real tight risk. I just don't see it at the moment, so I'm going to keep it off the bias chart. Norwegian krona, I closed out the Norwegian krona at a very good price. This is the 38% retracement, was at 862, and it is also this yellow trend line support. And you can see it is supported right now. This bounce that you're seeing in the Norwegian krona is really reflecting a sell-off in crude, but crude's not selling off. So I guess the reason why I point that out is because in order for me to, to short the Norwegian krona again, it'd have to break through this 860 now, and we have to see crude really rallying, like big time squeezing. And if not, I'm not interested. Looks like we're making our way back up towards resistance, and but what are you going to do? You're going to short it here because you think crude oil is going, you think crude oil is going back up again? I mean, maybe, but we came out of this ascending wedge, okay, which when you come out of an ascending wedge and you hit a 38% retracement, or a 50% retracement, a 38% retracement, which is the minimum expectation. It achieved its minimum expectation coming out of an ascending wedge. It did it. So now that it's done it, what do? I mean, there's no real great setup at this moment here. US dollar Swedish krona. US dollar Swedish krona, I assumed would spike up too. It did, just because the Riksbank is another central bank that's imposing negative interest rates. So it is spiking up, but there's really, what do you want to do with that? There's nothing really to trade here. It's stuck in this big, look how bullish that move is. I think eventually we're going to break out of here, and it's going to go, the dollar's going to go higher against these, but there's no great entry point anywhere near here. There hasn't been. So there's your bias chart for now. I'm going to keep that up there for a moment so you guys can take a picture. I would like to spend just a couple of minutes discussing some yen pairs, okay, because the yen pairs we actually have news in